You are listening to Mining Stock Education.
So yes, I see a hyperinflationary depression, and quite honestly, in my opinion, the hyperinflation has already begun. It's just not yet apparent. But because I am 100 gazillion% certain that we are at the end of this experiment and we are resetting into a new currency, yeah, frankly, I'm all in the hard assets and I hold them. And you just divide all the debt by all the gold, and then that tells you the true fundamental value of an ounce of gold.
Thank you for tuning in to Mining Stock Education. I'm your host, Bill Powers, and in today's show, you're going to hear from first-time guest Lynette Zang. She's a sound money advocate. She's a macroeconomic commentator, and she empowers individuals to attain financial freedom and independence utilizing the principles of sound money and community. Lynette, welcome to the show for the first time.
Thank you so much for having me, Bill. I really appreciate being here.
So a few weeks ago, I had a guest from Elliott Wave, and he looks at the charts, and just with that, he analyzes things. He says there's going to be a generational move from tech and non-tangible assets into commodities and gold, tangible assets that people can own in their own possession, physical things in this world. Would you agree with that thesis?
I certainly hope so, because if you don't hold it, you don't own it. And for me, it is bigger than just a normal little trend cycle, because what I've studied since 1987 when I was a stockbroker at Shearson are currencies and currency life cycles. So I 100% concede that we are at the end of this experiment. We are resetting into a new currency, and the hard assets, the gold and the silver, but, other hard assets as well, are the keys that you need to transition with your purchasing power intact from one system to the other. So I think that we are definitely, there's no fever like gold fever, and I definitely see us at the beginning of the gold fever, yes.
Do you think that you and I are United States citizens? You're a United States citizen, correct? Yeah, so am I. So from our vantage point, where we sit in the world, do we get to a new world currency without hyperinflation? What is the road path to get there?
Yeah, I wish we could get there without hyperinflation, but frankly, the debt that has grown and the debt to GDP, I mean, it's just, it isn't that it's not sustainable, it's not payable. And so as we transition into the new system, which, the direction they want to push us is all digital, all surveillance, then they have to reset that debt. And how do they do that? I mean, what tools do central bankers have? They have this. That's what they have. And that's what they use. And what happens every time they do that is the value of everything that's out there declines. So yes, I see a hyperinflationary depression, and quite honestly, in my opinion, the hyperinflation has already begun. It's just not yet apparent. But remember, there's only one way to fight deflation: a stock market implosion, a real estate market implosion, even a bond market implosion. Those are all deflationary. And the only way to fight that is with inflation, with more of this. Tell me, what other tool do they have?
And for audio-only listeners, you're shooting dollars into the air with some sort of gold gun there, right?
Yes, I am. And I really wish that it was as simple, because in a couple minutes, I'm going to run out of cash in this gun. And I wish that would happen to the central banks.
So what do you see? Do you see a global currency arising that overtakes the US dollars? What is the next step, and how is gold related to this potential currency?
Well, the direction that they're trying to take us in, and, maybe they'll be successful in I'm hoping that we won't. Well, I'll come back to that in a second. But I believe that the next world reserve currency, we're going to have a universal currency. And in my opinion, it is most likely to be guided by the International Monetary Fund and their internal currency, the SDR, which stands for special drawing rights. It's just a name, but it's a basket of currencies. And they've been diligently working on a universal currency so they can include every single currency in that SDR. So now you've got this huge global umbrella, and then it breaks down into the local currencies like the US dollar or the Chinese yuan or the British pound or whatever. So I see one big, really universal currency and then a whole bunch of local ones. And the US, with the exceptionalism that we've had as the world reserve currency, which has really not been true since 2000, but okay, we still have the title anyway. But we're going to feel it the most because at the IMF, they had created the SDR in 1969 and put all these mechanisms in place to take over as the world reserve currency from the dollar. But then we went and created the petrodollar. And so all of that was kind of put on pause until 2009. And once 2009 came in, and it was actually China that said, what about the SDR? So this is the great financial crisis. And I went, well, that makes all the sense in the world because it's been around a long time. Everybody's got a bunch. And since 2009, they have given everybody a whole lot more of them. But what they have is called a substitution fund. And what that means is that anybody, any corporation or government around the world that are sitting on dollar-denominated assets, we always hear about how prominent the dollar is, how prominent it is, and nothing can take over. Well, what if all of those countries that were turning their back on dollars right now took whatever their holdings were, deposited in the substitution fund that was then converted into SDR denominated assets? Wow. Think about that, because what would happen like instantly is there would be no more need on a global basis for US dollars because they would have it all in the SDR. Now, the dollar's part of that, but it would be a very small percentage. And all of a sudden, you have the SDR that is now the most widely held currency. So that, to me, is what I see in our future, because why reinvent the wheel when you already have one that's in place? And all you have to do is tweak it a little bit, which they've been doing seriously since 2009. So that's what I see. Universal currency guided by unelected IMF officials, and then local currencies, the dollar, the euro, the yen, whatever it's going to be.
And how does the BRICS nation and what they've been doing fit into this conceptually?
Well, everybody kept saying that the BRICS are going to come out with this currency that's 40% gold-backed and blah, blah, blah. When you really dig into that, the BRICS nations have not said that, and they'd have to get rid of the debt. So they'd still have to go through hyperinflation before they could actually back any currency with gold. What they've been talking about is a global trading arrangement. And that, and especially inside of those BRICS nations. But you also have those two very powerful countries, meaning India and especially the Saudi Arabia, where they're kind of straddling the fence with some pretty substantial arrangements with China as well as the US. And they're not really prepared to tip it over one way or the other, as we've just recently seen with some of the agreements when President Trump went over there and met with Saudi Arabia and announced all of these deals for Boeing and what have you. So I do not personally view them as big a threat to the dollar dominance and their currency. There's also a big difference even in backing versus pegging. And so, yeah, I don't see them as taking over. I still go back to the IMF. It's just more logical. And if they did it, it's just regional, right? Versus universal. And even though we've been going through a pretty hefty deglobalization phase, not in the financial system. And with the digitization of all assets, that actually makes the financial system a whole lot more global than it is right now, especially, and I hope this doesn't happen, but especially once they digitize the hard dynastic wealth assets. So gold, silver, real estate, truly rare collectibles, those kind of things. Once they digitize them and break them down into itty-bitty pieces, that's also global. So I see more of a global currency than China's taking over or the BRICS are taking over from the U.S. I think it'll be more universal than that.
When you say digitized, do you mean like, how they have the NFTs and how that craze, buy monkey fractional ownership of a monkey picture, but you're saying there'll be fractional ownership digitized on the blockchain of gold and other assets?
They're working on it, and this is not something in the future. It's JP Morgan, it's BlackRock, it's Fidelity, it's all of those, the big major players, it's the tech players. They've been working on tokenization, so not just tokenizing deposits, but they absolutely had, the IMF did a report on tokenization recently, and when you dig into that report, right down, hidden in the bottom is your real estate, gold, and rare collectibles. So yeah, that's the goal, is to get everything in the system. And in that way, what does that really mean? That means that they're developing a whole lot more collateral. These are not assets that have been easily collateralized by Wall Street, but if they're converted into digital form and held on the blockchain, well, now, at least in theory, they can leverage those assets now. And you don't even realize it because you've just got it on your phone. How convenient. You start to spend that money can go anywhere. And before you know it, 2030, the WEF says you will own nothing. Yeah.
And you will like it. So.
Well, I don't think I agree with that last.
Right. No, nor do I. I don't want to eat bugs. I just had some steak for lunch. So how do we get there? Through war or the pain of hyperinflation? Like, what will be the catalyst that will bring forth this new economic system?
Well, that's a great question. And, you said like war war is one of them. There are repeatable patterns that happen 100% of the time. And it's happened to over 4,800 currencies that do not exist anymore, right? So it's a combination, right? And what do we see every single time we change currency regimes? We do definitely see war. I don't know. Is that out there right now? Yes, we've got the war part. We see civil unrest. We see stock markets imploding, right? Now they can prop it up with more inflation, but we see markets imploding. And so we see a lot of those same patterns, civil rights issues, women's lib issues. I'm sorry, I just dated myself, which is fine because I'm 70 and I don't care if anybody knows it. I'm glad because I was there, right? But that was the transition from a gold-backed currency into a debt-based currency was in my time. But there are still, the Me Too movement would be the equivalent. So we're seeing all those same patterns. And what needs to happen is a big crisis, a crisis that's big enough, that scares people enough to agree to anything that they want to cram down our throats. I'm fighting that by participating, and I encourage everybody to do this, frankly, the sound money movement. We have to get sound money back in our monetary system again, or what we have in our future is way worse than what we've had in our past, that wealth transfer. And this isn't a battle for me because I'm old, right? But I have grandchildren, and eventually I expect to have great-grandchildren, and on and on. And that's who we have to fight for, is for the future. And if they say that something is backed by it, like Zimbabwe, right? All confidence was lost in the Zimbabwean government and the Zimbabwean currency that's been in hyperinflation since 2006, right? And so all confidence was lost. So what did they do? Another repeatable pattern that happens 100% of the time. They brought gold into the equation to regain that confidence. And they said, well, this new currency that they came out with on, I believe it was April 8th, I could be off a little bit on my date, but in April of 2024, that it was 40% backed by gold. No. It was only in digital form. And it was non-redeemable. In other words, you could not pull the gold out of that currency if you didn't like what the government was doing. So that means that the public did not trust it and they cannot get adoption for it. So that means it was merely pegged. And I bring this up specifically because we are hearing a lot about asset-backed securities. If you cannot convert that asset into the or that token or whatever, that digital asset, into the underlying hard asset, it ain't backed, it's just pegged, and it doesn't mean anything. Hence, the Zimbabwean government in October, what did they do? A 44% overnight reset. And I just happen to have a $10 trillion Zimbabwean paper note here, right? You know what I can buy with this 10 trillion? I'm a trillionaire in Zimbabwe. You know what I can buy with this? Nothing. Not even eggs.
So, Lynette, you know GLD is not real gold, right?
Correct.
But would you, some of those Sprott physical trusts, though, would you put more trust in that, or is there a general distrust that you have towards the whole system in that regard?
Here's the thing. You got to read the contract. If you don't hold it, you don't own it. And the Bank for International Settlements actually says in their, I think it was 20, don't hold me to the date, maybe 2022 or 2023, what role for gold in foreign exchange, which means that they are definitely, and it's a tier 1 asset, gold is money. And what they say is gold is the only, or actually what they say is physical gold held in your home is the only financial asset that runs no counterparty risk. So while I would say that something like Sprott, who's in Canada, is better than GLD because you can take possession, still in all, what happens if Canada chooses to do an overt confiscation? What's in Sprott is bullion. That's what's in there. That's monetary gold. And in this country as well, you know, the way that I determine what I'm going to buy as in terms of gold, not silver, but in terms of gold, if I can hold it inside of an IRA, I'm not buying it. This is my 1 ounce of bullion that I own.
I may be getting into the weeds here for those that don't understand the U.S. retirement, but a solo 401k for a self-employed individual, you can structure it so that you can hold physical gold, silver, even real estate in it if you structure it correctly. Would that be about the only, investment vehicle out there for retirees that you would recommend, or any insights here?
Pretty much. Where you hear my hesitancy is the more visible anything you do is to the government, the more control you're actually giving them. And I frankly, look, I've been living my life here pretty much my entire life. I mean, I've been studying hard assets, been in banking since I was 15, studied business finance, was a banker and then a stockbroker and then a gold broker. So, I mean, I've been in these markets on some level pretty much my entire life. And this has not always been true, and I don't expect it to always be true. But because I am 100 gazillion% certain that we are at the end of this experiment and we are resetting into a new currency, yeah, frankly, I'm all in the hard assets and I hold them.
So what percentage should be gold, or how does that relate to one's net worth? And what about silver for someone that maybe only has 150 grand in their savings?
So the way that we do it at Zang Enterprises is we have a sound money strategy, and we take a look at what assets you've already accumulated. And then we want to protect that with gold, right? So it's a properly diversified portfolio. But you also need to be able to sustain your current standard of living. And so you've got your barterable portfolio. Barterable portfolio is silver and or fractional gold or different kinds of gold, but kind of raw, kind of closer to bullion, but not really bullion, because I prefer the collectible gold. I feel more secure in that, especially since in this country, we've got a history of gold confiscation that's happened 3 times.
Lynette, for the record, all of my gold is for religious purposes and cannot be confiscated.
That would be a good one.
Yeah.
To look into that.
I looked into it, and I've already declared all of mine is for religious purposes.
Awesome.
Yeah.
I'll have to share that information with you. I'd appreciate that. But so what we do is I have a whole list of what is better served by gold in a barterable portfolio and what is better served by silver. As example, if I'm going to go to the gas station because I want to put a tank of gas in my car, I'm going to be better off with silver, right? If I need to pay my property taxes, I'm going to be better off with fractional gold. So we can determine the true fundamental value of gold and of silver, and therefore we can determine how much you need to properly diversify any intangible holdings that you have, so stocks, bonds, whatever else you're choosing to hold. And then we want to look at opportunity positioning after we secure what you've already accumulated and we secure your ability to sustain a reasonable standard of living. Then it's opportunity positioning, because a rising gold price is an indication of a failing currency. And on the spot gold and spot silver market, which you might notice nobody ever or rarely says spot gold, spot silver, they say gold and silver, because Wall Street wants you to think that they're giving you the true value. But I'm sorry, there was a day when Wall Street was maybe an indicator of fair market value, but that hasn't been true in a really long time. That is simply a trading market. And particularly when you're looking at gold and silver, that's a threat to what they're doing, because inflation is baked into the system, and that prevents inflation, that prevents you from having to suffer through inflation. So gold at 3,500, 10,000, severely undervalued, and so is silver. And that's why I'm all in, because I believe quite strongly that you should always understand the true value of any asset or any instrument, because it's the only way for you to really know, is something undervalued, fairly valued, overvalued. Do I want to buy it? Do I want to hold it? Do I want to liquidate it? And it's not rocket science. It's actually pretty darn simple to know. So, for example, how is this crap created? By debt. That's how it's created in the current system everywhere in the world. This is fiat money. This is sound money, gold, right? So they're both money. They're just the flip side of the coin. So how do I know how much this really is? Gold, I mean, what are they telling us? It's at $3,200 right now. Woohoo, it's gone up a lot. All you do is you take all the debt that's been created in the world and you divide it by all the gold that exists in the world. It can even be in-ground gold as well as above ground, because gold is indestructible. And you just divide all the debt by all the gold, and then that tells you the true fundamental value of an ounce of gold. And I can't give you a whole lot of guarantees, but I can give you this one. At some point, all assets go to their true fundamental value. So how do you know what that is with dollars? Well, you go on the Federal Reserve Education Department, FRED, anybody can do it, and you put in the search bar, purchasing power of the consumer dollar. And what you will see when you look on that left-hand axis, you'll see where a dollar used to buy a dollar's worth of goods and services. And if you look down at the bottom, what do you got? A big fat goose egg, a big fat zero. And we have been on a relentless march toward that zero since 1913. Picked up speed in 1971 picked up speed in 2020, and officially we have 3 cents left out of that dollar. So what happens when you get to zero? Nobody has been able to. I asked that question to brilliant people that I respect so much and use their work so much, and not one person can answer that question for me. But I could tell you, hyperinflation. Because we get to zero when all confidence in the currency is lost, because it's layered confidence. And what I've been watching since 2008 is an erosion of those layers. So 2008, we had bank-to-bank confidence in the interbank lending, which they don't even report on anymore, gone because banks refused. They lost confidence in each other, so they stopped lending to each other, and that was a big fat down. And now they don't even report on it. It's gone. And then in 2015, with the Swiss surprise, that was, do you kind of remember that? When Switzerland had pegged or attached the Swiss franc to the euro. And so whatever the euro did, if it went up, so did the Swiss franc, and if it went down, so did the Swiss franc. And then governments had to modify their policies so that they could track exactly. And Switzerland kept coming out. And remember, that's when all the central banks were working together in a unified fashion, right? And the Swiss central bank kept coming out and saying, this is our highest priority. And I can go into this more if you want, but this is our highest priority, our highest priority. They came out 2 days and said, this is absolutely our highest priority. And 2 days later, bam, they shifted it. So central bank working together in coordination with other central banks when it was not in their best interest, gone. Central bank to central bank confidence, gone. And then I believe it was June of 22 when the central banks, that had been operating under forward guidance, so letting the markets know what they were going to do so they could get into position to benefit from it. And they kept saying, we're only going to raise interest rates 50 basis points, 50 basis points, 50 basis points. This shocked the Hades out of me when they did it, because all of a sudden, bam, they raised it 75 basis points. And while that may not seem like that big a deal to most people in the markets, right? These are interest rates. These are the market value of debt. So when they raised those interest rates, that impacted the solvency of every single bank and every single corporation. But what it also did, more importantly, and why I was so shocked, is they gave up the market confidence in the central bank. So we've got bank to bank, central bank to central bank, market to central bank. What's left? Public. And so as I'm watching the confidence and the sentiment plummet month after month, week after week, this is not good, because that is the only thing that is holding these markets up. And when we lose that, that's when the hyperinflation becomes obvious.
Lynette, I would rather have $2,000 gold and not have my neighbors trying to kill me to take my chicken eggs than $10,000 gold. You focus on community and freedom. Maybe share some of your thoughts. How is this going to affect us in society?
I think we got a little bit of a taste of it in 2020, right? So people think, oh, well, we've all been trained to just be able to go to the grocery store and get whatever we want, and it's reasonably priced. I think everybody can see how much those prices are going up. And to your point, when people are hungry and hopeless, they make choices they would not otherwise make. And so I personally, in 2020, I'm walking around my gardens, and I had one of my employees freaking out because she couldn't get toilet paper. I said, don't worry, I have plenty of toilet paper. It's not a problem. So I'm walking through my gardens going, oh, look at how smart I am. I have that food, water, energy security. I've got all that mantra piece, except there were riots near my house at the Capitol, because I am in dead central Phoenix. And there were riots up near where my daughters live in Paradise Valley and in Scottsdale. And I thought, there's the hole in my strategy because that night I slept with a gun in my bed. I mean, that's not the way I want to live my life. So I do think that things will get very, very nasty when people are hungry and hopeless. And you brought up your chicken eggs. I actually became an urban farmer after the system died in 2008. And so I actually planted out my entire exterior on my property. And I don't have a lot. I mean, it's a half an acre in the middle of the city, but it is planted out with food like crazy. So and my neighbors know this, they'll come and they'll pick a pomegranate or a zucchini or some herbs or whatever they need. And my hope is that those hungry people will come by, take what they need, not destroy the next, so that they can come back the next day and feed their family. But I can't really control that. So I've spent an awful lot of time and energy and money on security on the house, but they can do whatever they want with the exterior. And now I do have an off-grid bug-out property, 41 acres, very, very, very remote, but it's all off-grid. It's all solar. I have my own water and my own water rights. I have enough food up there to support a community of 40 people. It's critically important, but I do believe in helping the people that cannot see what's happening, because I can't blame them, right? This is not what we're trained to look at. We're trained to trust. Just trust the system. It'll be okay as they're almost invisibly taking your wealth and transferring your wealth their way. When we get into this, it's not going to be so invisible. And so we need to be prepared to sustain ourselves. That's why communities become so important. Local community, if you're in a city or wherever you are, go to a farmer's market. Get to know who grows your food. Give them a day or two of your labor. Create that relationship so that when push comes to shove, if there are two people and they both want food, but they know you, guess who's getting the food? Build that local community to create that surety in those things that you need to sustain a reasonable standard of living. Even if you're in a big city, there are community gardens. Even if there are no plots available, volunteer your time. Get to know those people and create that community, because there is safety and power in numbers. But also what we have to do is take our power back. I mean, back in the day, prior to 1933, you could walk into the bank with this. This is a gold certificate, right? And you could walk into the bank with this, and you could walk out with this. And if you did that, that was your vote of disapproval for the governments and the central banks, because it created restrictions around how much debt they could grow and what they could do. But at the same time that you had, it's brilliant. It's brilliant. It's evil brilliant, but it's brilliant. You had all three things working and circulating together at the same level of purchasing power. These are all $20. All of them. Okay? So when 1933 happened, this came out in 1913. These two things went away, but people had 20 years of using this. Nothing has changed. Oh, yes, everything has changed, because you didn't realize it, but you just lost your power over the government. What, are you going to vote? Come on. They've got the Electoral College. Do you think your vote really counts? Well, it does count. And that's why I take us to the global level as well as the local level. Florida just legalized gold and silver as legal tender. We have to get the states legalizing gold and silver to give the federal government the push that it needs to legalize that. But we have to also work on a much larger scale. because this is not just a local issue. It's not just a U.S. issue. This is a global issue. There are 8.4 billion people in this world. If we can get 3% of them to buy physical gold and silver and hold it in your possession, that's your vote. And I believe that we can have a shot at a seat at the table to help determine the next monetary iteration. And as lofty as that may sound, and honest to God, it sounds lofty to me. I mean, this is not something I ever thought I would do, in my lifetime. But this is the best opportunity because we're already shifting into a new system, right? This is the best opportunity that I have ever seen to get sound money back in the system and give the public their power back. There are more of us than there are of them. People, let's take our power back. This is the only way to do it. If everything is digital and full surveillance, what power do you have? Do you even understand how these things are programmed? You don't have to just be an engineer. You have to be a specific kind of engineer. And maybe you can understand it here and you can't understand how they do it there because it's so convoluted. This is simple. It is used in every single sector of the global economy. Ba-bam. That's why it's never gone to zero. They have not been able to come up with a lab and duplicate the same properties that gold and silver have. Ta-dam! That's why it has remained money for thousands and thousands of years. The cryptocurrencies, that's a test. I personally do not think that it's coincidence that Bitcoin came out in January of 2009 and quantitative easing came out in March. I believe it is a Trojan horse. It's here to stay, no doubt about it. Coinbase just got entered into the index. They have created, how do you create a mint? Go back and read that 1996 NSA white paper. So this has been in the works for a very long time. And I'm not saying that that is necessarily going away, but I want redeemable money in there. I don't care if it's 40%. I don't care. You keep the other 60% of it. If I don't like what you're doing, I want to be able to take this out. And they're taking us just the opposite way, which is a form of slavery that we're going into. And I'll just point out, how much different do these two things look? Why are the visible representation of cryptocurrencies gold, silver, and platinum? Why? Because they're trying to get your confidence.
Lynette, have you thought about, from a time frame perspective, with this big picture thesis, like what is the downside if you're wrong in terms of the time frame with this planning? And then the reason I bring it up is I do mining stocks now, but I was buying gold and silver for years, and then I was buying silver in the 20s, and then it was the high teens, and then it got under $15, and I think under $14 or thereabouts, and then I said I'm gonna try to profit in a leveraged way from silver's upswing, which I did. I started buying mining stocks in 2016 January, and they went up 10 times in that time frame. And so I guess I adjusted my perspective a little because I bought some land, did basically everything you've talked about. I did,
Awesome.
and then I added the opportunity, the mining stocks to it, which added a lot of gusto, when you can hit it right in oil stocks. Had you thought about your downside, or how do you advise your clients on the time frame? Because you have this expectation, but what happens if it doesn't occur within your time frame?
Well, look, I'm old enough to realize all in due time, just not necessarily mine. And what is the downside? Because I do get that question a lot. Oh, you've got this bug out and all. So what? I enjoy it. So what? I sit on gold and silver. I don't care. All in due time, just not necessarily mine. And I don't really put a time frame on it. But what we do is we build the portfolio in layers. And some of that layer is actually cash, right? So we're looking at where we are in this period and what your circumstances are to determine how we build out this portfolio, and it can include many different things, but it's layered. It's a very layered approach, so that no matter where we are inside of this, you have your needs covered. If you have need of income, depending upon your age, I mean, we put your goals and your circumstances first, and then we build around that. And we don't really tell you what you should do. We're telling you what history has shown us. This is the most likely next outcome for this and this and this. So if it's a different time frame, it doesn't really matter to me. I never thought I would see this in my lifetime. And I started buying silver at $4.38. Okay.
A lot lower than me. And, you know, this idea, I should point out, just of distrust, when my wife's had a family member die, okay, an old farmhouse, and they went through the Great Depression. So when the family was cleaning out the house, they knew that he didn't trust the banks. They went everywhere throughout that house searching. They found $40,000 cash hidden all around the house because he went through the Great Depression. You know, he didn't trust the banks. So it's not new, what a lot of the ideas, yeah.
It's true. And I agree with that. And my daughters have learned, you know, when they go through my house after I'm not there anymore, they will look everywhere. They will thoroughly look through everything. No, I have no trust at all. And in fact, there is a recent client of ours that was attempting to wire over funds. And, you know, go in and try and take out cash. Go in and try and buy gold and wire funds. The banks really are not all that keen on that, because you're taking the funds out of their system and then they can't use it for their benefit. They can't rehypothecate it. And he attempted to do that twice, and they said no. They said no. Because it is just your perception that that's your money. It's not your money. Once you make that deposit, it's their money. You are just a beneficial owner of that money. So this guy, after 2 attempts to wire the funds, that bank, and I probably won't say the name, but I'd like to, but I won't. I don't like that bank very much. But at any rate, they actually shut his account down. And you know what he said? He said, thank God I had cash out of the system, because that would have really hurt me. So yeah, you trust the digital system? There's this bridge in Brooklyn that I could sell you. I don't really own it. Oh, what the hey?
Mm-hmm. Right? If listeners want to get in touch with you, how would they do that, Lynette?
I am all over the place. So super active on YouTube and Twitter at the Lynette Zang, on Instagram and Facebook at Lynette Zang, and LynetteZang.com. But also, we love human contact, and we are very, very hands-on. So 833, you're going to like this number. GLD ZANG.
Say it one more time, please. One more time, that number.
833 GLD ZANG.
Okay. Well, Lynette, it's been a lively and enjoyable conversation. Thank you for coming on the show today.
Oh, thank you for having me. This has been a lot of fun. Thank you.